Thank you, Madam Chairwoman. Chairman Powell, thank you for your time, and really want to commend the Federal Reserve for the work that was done at the end of March to provide liquidity and stability to our economy, to deal with the massive surge in demand for US dollars. And we're just so grateful that the US dollar has become the world's reserve currency in a time of crisis. Not just Americans, but people all around the world want our dollar. It is indeed a source of our strength as a country, is to have a strong dollar that has become the world's reserve currency. It does great things for our capital markets and frankly helps enable the deficit spending that we've continued to do. Because we certainly haven't saved for bad times. We're able to navigate them because we still can borrow. I wonder, sir, do you have a definition of sound money?
We target inflation that averages 2% over time. That is what we consider to be.
Well, that's a policy, but I mean, when you think of sound money, what would you say constitutes sound money?
Well, the public has confidence in the currency, which they do, which the world does. That's really what it comes down to, that people believe that the United States currency is perfectly reliable and stable in value.
Okay, so as a store of value, it clearly isn't stable in value. It is not. But as a store of value, the US dollar really, is it diluted as a store of value when M2 goes up by more than 25% in 1 year? Does the printing of more US dollars somehow diminish the value of the dollars that others hold?
You know, there was a time when monetary aggregates were important determinants of inflation, and that has not been the case for a long time. So you'll see, if you look back, the correlation between movements in different aggregates, you mentioned M2, and inflation is just very, very low. And you see that now, where inflation is at 1.4% for this year. Both.
Yeah, you keep using that, and you keep using it to talk about inflation. And I don't think that's the only proxy for whether the dollar is a store of value and an efficient means of exchange. It is clearly still the world's reserve currency, but we're putting it under a pretty big stress test by diluting the value of the dollars. And I think one of the indicators of that is when the US government issues debt, all this spending that we've done as a country, it isn't really funded, is it? I mean, there's not a true market demand for this much debt. It's not being lent. When there's borrowing, there's actually a lender. How much has the Federal Reserve had to purchase to bridge the gap between market demand for treasuries and the actual need to finance the spending?
That's not at all what's happening. We don't have to purchase any of this. We purchase it because it is providing accommodative financial conditions and supporting the economy in keeping with our mandate. There's plenty of demand for US Treasury paper around the world.
So all of it would sell. You're competing. So are you bidding up the price then? Is it your contention that you're inflating asset prices by increasing this purchase?
No, I think that we could sell all of our debt. That's the reason we do it. But by the way, we issue debt when we issue United States obligations in the form of reserves when we buy treasuries. So we're not actually changing the amount of obligations outstanding on the part of the treasury. What we're doing is we're substituting an overnight reserve for a treasury bill. It has no effect on the overall outstanding obligations of the United States when we do that.
Right. So the growth of the Federal Reserve's balance sheet, you don't think that has anything to do with the disconnect between Wall Street and Main Street? Or let's just take as an example the confidence people have expressed in Bitcoin and other cryptocurrencies, and well-respected, proven investors like Ray Dalio, who said cash is trash. Isn't it because the US dollar is being destroyed by fiscal and monetary policy?
It's hard to say that it's being destroyed. I mean, if you look at, so another way to look at the dollar, if you mentioned the dollar, you can ask domestically what can it purchase, and that's a question of inflation. You can also look at it in terms of a basket of other currencies. And
yes, I understand, but if you look at it, sir,
the dollar is in
my time. The key to this is Look, the Fed has done a horrible job at predicting asset bubbles. They have. And if the pensions are going up because the market prices are going up, people with marketable securities have their basket of wealth going up and wages aren't. Current consumption, teachers, for example, they have a great pension, but their current consumption isn't going up. So CPI lags what's going on in the investment. I think it's a big concern. And I would just implore you and the other members of the Fed to pay attention to monetary inflation, not just consumer price inflation. I yield.